So I think, unlike the prior peaks of 2000, I don't expect any significant pullback from the current $3,000 price. In fact, we're probably going to go straight up to 4,000 and beyond. But actually, instead of buying gold, which you could buy, and I still recommend because it's going up, you could buy silver, because silver is still below $34 an ounce, right? So if you can't bring yourself to buying $3,000 gold, even though in the scheme of things it's still cheap, then load up on $34 silver. Today is March 17th, 2025, and it's not only St. Patrick's Day, but it is the first day where the spot gold price closed above $3,000 an ounce. The exact close was $3,001.80. You know, gold first closed above $2,000 back in April of 2020. That was during the COVID lockdowns. And I remember that the phones were ringing off the hook at Schiff Gold. Everybody wanted to buy gold at 2,000. There was a lot of fanfare. The media covered it, $2,000 gold. The premiums really were shooting up. It was kind of hard to get some of the products because there was so much investor demand at 2,000. Now, it almost got to 2,000 in 2011, got to 1,900 and change. And I remember that as well. Everybody assumed that 2000 was kind of a foregone conclusion. I remember back then, I thought it was going to go a lot higher than 2000. We had just started all the QE programs. We were printing all this money. The dollar was looking like it was going to get killed. So it didn't seem that gold was going to stop. Well, then gold actually went into a pretty big decline, and it bottomed out in December of 2015. When the Fed finally hiked rates, and it bottomed out at 1,050. So almost a 50% decline after we almost got to 2,000. But then when we got there again and actually got above 2,000, everybody thought this is it. This is liftoff, and there was a lot of demand. And what happened? The price of gold fell again. It didn't fall as dramatically as it did the last time. It didn't have a 50% correction, only about 20% or so. Gold bottomed out above 1,600 in 2022. And then it got above 2,000 again in the fall of 2023. Except the difference between $2,000 gold in 2023 and in April 2020 was that the public wasn't really interested. They had been burned twice before with $2,000 gold, and the third time wasn't the charm. Nobody really wanted to buy gold at 2,000. Everybody was convinced that it was the top and it was going to go down again. And I had a hard time trying to convince people that no, 2,000 is no longer the ceiling for gold, but the floor. But a lot of people didn't believe me, and gold finally broke out decisively above 2,100 in 2024. Probably it was, at the end of the first quarter. And then it never looked back. The price of gold kept going up until today. It's now above $3,000 an ounce. But again, today, no real media coverage. It's barely been mentioned. Nobody is talking about it. Not like they talked about it at 2,000 in 2020 or when it almost got to 2,000 in 2011. It wasn't even an afterthought or a second thought. Nobody is paying attention. The public has been selling gold the entire rise from 2,000 to 3,000. So to me, this looks very different than 2011 and 2020. We've built an enormous base for gold at 2,000. This is a brand new leg of a huge bull market where gold started below 300. We've now gone up 10x in the price of gold so far this century. Gold is beating the S&P 500, and I think it's going to accelerate from here and even take a bigger lead on the stock market as the stock market goes down, but it's doing it in complete obscurity. There is no gold rush going on. Investors haven't woken up. In fact, all of the buying really is being driven by the central bankers. Investors haven't even woken up to what central banks are doing, but the central bankers are the insiders of the fiat monetary system. So when you see in the stock market, if the insiders, the people that work at the company, are buying company stock, that's a good sign. If they're selling company stock, then maybe they know something bad and you should follow their lead. Well, the insiders in the fiat monetary system have been dumping their dollars to buy gold. They obviously know something, and the public hasn't caught on yet. So I think, unlike the prior peaks of 2000, I don't expect any significant pullback from the current $3,000 price. In fact, we're probably going to go straight up to 4,000 and beyond. And in fact, when gold hit 2000 in 2020, in April of 2020, the dollar index was at 93. Today, the dollar index is at 103. So the dollar has increased 10%, even as gold prices have risen 50% in dollars. And what that means is that the price of gold in other currencies, like the euro, like the pound, like the Australian or Canadian dollar, or the Japanese yen, or a lot of other currencies, gold has done even better in terms of those currencies than it has in terms of the dollar. But my expectation is that the dollar has topped and is headed substantially lower. I expect the dollar index to get down to 93 again before the end of the year. In fact, I think it'll go lower. But when the dollar index hits 93 next time, I expect gold to be pretty close to $3,500 an ounce, not 3,000. So this is the time to buy. But actually, instead of buying gold, which you could buy, and I still recommend because it's going up, you could buy silver, because silver is still below $34 an ounce. The reason that silver has not gone along for the ride with gold is because central banks aren't buying silver. That's what retail investors buy. Silver has been described as the poor man's gold. Well, men and women haven't been buying gold or silver unless they're central bankers. So silver is the sleeper precious metal that's about to wake up. Silver doubled top at 50 in 2011. It didn't even get back to 50 in 2020. It got to about 35. We're almost there now, but still not quite. I mean, gold has gone up by 50%, and the price of silver has gone down. That's really unprecedented. The other time silver hit $50 was 1980, when the Hunt brothers tried to corner the market. I think we're going to see $50 silver probably this year. And I think when it breaks $50, it's going to be like gold breaking 2000. It's going to go up really and not look back. So if you missed the boat on gold, although it's not really missed because I think it's going a lot higher, but if you miss buying $2,000 gold, you don't want to miss buying sub $34 silver or even sub 50, because you won't be able to get those prices for long. And at Schiff Gold, it's that we got gold in the name, but we still sell silver. So you can call up Schiff Gold and order some silver. And then you know what? When silver really makes a move, maybe you can trade out of some of your silver and get a little bit more gold. But if you really want to go for the home run, you want to look at the mining stocks. I don't really talk too much about them on these Schiff Gold videos, but I can't help it because the mining stocks, I think right now, are the best way to buy gold if you've got more of a higher risk tolerance. You know, the gold stocks are lower today than they were when gold closed at 2,000 in April of 2020. So again, you've had a 50% rise in the price of gold, yet gold stocks that mine that gold and have huge reserves of that gold have actually gone down. You know, when you buy gold from Schiff Gold, you're buying above ground gold. It's already been mined and refined, right, and turned into a coin or a bar, and we ship it to your house. But when you buy stock in a gold mining company, you're still buying gold. You're just buying gold that's still in the ground. You're buying the reserves of the company because you become part owner of a gold company when you buy stock in the company. And the assets of the company are the gold reserves. Now, the business is to mine those reserves and sell them, right? And then earn cash that it can distribute to the stockholders. But it's a way of buying gold. Now, the reason gold in the ground has not done as well as gold above ground has to do with the rising costs of mining. But recently, the price of gold has been rising faster than the cost of mining it. That hasn't been true because inflation has driven up mining costs faster than it's driven up the price of gold because there's been so much skepticism on the part of investors that keep thinking the price of gold is going to fall. Investors haven't woken up to the reality of high inflation as far as the eye can see. They still believe that the Fed is going to be able to bring inflation back down to 2%. There's no chance that's going to happen. Inflation isn't going anywhere near that. In fact, it's already bottomed out and is headed much higher. None of that has really been priced into gold yet, but I expect that over the next several months and several years, gold prices are going to rise much faster than the cost of mining. And so that's going to make mining a much more valuable business, but also it's going to really unlock the value of the gold that's still in the ground. So for my money right now, you really want to load up on gold in the ground. And the way you do that is by buying stock in these gold mining companies. Anyway, I just wanted to do this short video because I remember how difficult it was to convince people a year ago to buy $2,000 gold. And so many people were waiting for a pullback. Let me just get a pullback. Let me just get, 1750, 1800. That pullback never came. And so the people who are waiting for a pullback are still waiting. And now the price of gold is 50% higher. And I know that a lot of people are going to feel the same way about $3,000 gold. Let me wait for a pullback. You'll be waiting, and the next thing you know, it'll be $4,000 gold. I don't think there's going to be any significant pullbacks worth waiting for. That doesn't mean there won't be any, but they're not going to be big enough to make it worth your time or the aggravation of hoping to catch it. I think you just move in now, but if you want to buy something that's not on the highs, then buy silver, right? So if you can't bring yourself to buying $3,000 gold, even though in the scheme of things it's still cheap, then load up on $34 silver. In fact, silver closed today at $33.92. So you still have a chance to buy silver below its all-time high. Now, I don't think that chance is going to be there much longer. So take advantage of it while you can. And again, if you're looking for the home run, if you're looking for the 10-bagger or more, then you really got to take a look at the miners. And not only do they mine gold, but they mine silver. So here's your chance, I think, before the rest of the world really wakes up. Right now, it's been the central bankers. They haven't had to compete with investors. They haven't been competing with the hedge funds and the endowments and the pension funds and the retail investors. And they've still driven the price up. But the central banks still have a lot more gold to buy. They've only just begun because this is a major divestment of U.S. dollars that is going to accelerate and gain traction. But when the investors start competing with the bankers, then I think you're going to start to see the price moving up much, much faster. So before there's a real gold rush going on, before you're competing with a stampede of other buyers, buy now while you can still get great prices. Bye for now, everybody.